One question I've recently been asking myself is this: what usually happens when the market and the price of the QQQ falls below the 48 EMA? Hi guys, welcome to my YouTube channel Methodical A1. Today I'll be backtesting from 2020 to 2026 what usually happens when the QQQ falls below the 48 EMA. And just one point to note is that the essence of this video is not to predict what will happen in the future, because past occurrences don't mean same occurrences are going to happen in the future. Is only for to be used as a reference and also to gather some information from what happened in past times. And just a disclaimer here: remember, I'm not a financial advisor. I'm just doing this for educational purposes and for research purposes. I like to look at the charts and see what the chart holds and what price holds. Always remember to do your own research. So yeah, let's get right straight into the charts. Looking at the charts here, this is the QQQ daily chart. As we can see here, price was in an uptrend from 2019 December, and what I describe as an uptrend is where you have the 13 EMA above the 48 EMA above the 200 EMA. Here I've added the 100 EMA in white and the 150 EMA in green as well. But this is what I'll generally describe as an uptrend. And you can see here price was above the 13 EMA. It's a really strong uptrend when the price is above the 13 EMA. Here it comes below, but quickly reclaims the 13 EMA and goes upwards. So this was the start of 2020. The uptrend still continued. At this point, we saw a gap down from 221 to 212. Now, what happened at this point? The next day, you had the break of the 48 EMA. At this point, if you can notice, the 13 EMA was still above the 48 EMA. Now, sometimes you might have this reaction, or you might have a market here which bounces off the 48 EMA, but here we can see it was clearly a breakdown below the 48 EMA. And then this continued all the way to the below the 200 EMA. So it actually closed a bit above, but intraday it touched below the 200 EMA. And then you can see here market was oversold at this point. K was 3, D was around 10. Now, sometimes people try to call the bottoms when you see a drawdown like this. It's almost impossible to call the bottom. It's best you don't predict the market, you just wait to see what happens. Now, the market tried a recovery and then got rejected off the 13 EMA. If you had bought this QQQ at this point, hoping for a rebound, you would have got absolutely smacked at this point, because the 13 EMA rejected, and see what price did all the way to this point. I know this year was COVID 2020, but it can also be some other occurrence in later years, something about oil price skyrocketing, or some geopolitical issues. And then we see here price finally reclaims the 13 EMA. Now, one thing I usually look at is the reclaim of the 13 EMA. When it reclaims the 13 EMA, does it actually hold? Um, Sometimes you can take a pro position just to see what happens. And always remember, when you get into a trade, there's no guarantee, there's no strategy that is 100% guaranteed that you're going to make profit. That's why trading is risky, and everyone must heed to risk management as a whole. And then we can see what price did here. It stayed above the 13 EMA, although there were these 3 days where it closed below the 13 EMA, which in some cases would have signaled further downside. So that's where the market is really dynamic. You can't really predict. Looking at this chart, it was looking like it was going to head further down, but you can see it came back, reclaimed, and then started this bull run, which we saw from sometime in March all the way. And then I think the best way I try to catch these moves and to get an entry, I don't try to enter on the daily charts. I sometimes break it down to the 4 hour chart to get an entry. But so this move continued all the way for this bull run. At this point, you saw another break of the 48 EMA and then a bounce of the 100 EMA. So this occurs sometimes where you have this bounce of the 100 EMA. And then if we were to enter into this market, a good entry point would have been this close above the 13 EMA. And you can see on the stochastic, you have a K of 50.08 and D of 32.25. So that's a good separation. You have a separation of almost 18 points there on the stochastic. So anytime you have a stochastic separation of 8 and above, it's usually good, but it must be taken into context. Sometimes you have a stochastic separation and price is still below the 13 EMA. There are high chances of rejection. Trading is a probability game. Also investing as well. You might invest in a stock and then the stock comes crashing, even with good company fundamentals. Sometimes it might just take an earnings report or it might take some bad news. So that happens. Here we can see as well, price broke below. This was towards the end of 2020, still bounced above the 100 EMA. So this would have been a good entry, but not so good because the market was a bit sideways. So this continued all the way down to 48 EMA break in 2021. This was February 2021. One thing we can notice with the 48 EMA break, the 13 EMA is I would call it the fastest because you have only 13 days where it's looking at that exponential moving average. Then 48 EMA is like the median, it's like at the medium range. So once this price breaks 48 EMA, most times it usually signals for that downside. But the market is very dynamic, like I always say. It's not a guarantee that breaking of the 48 EMA you would see further downside always. Sometimes it breaks and still recovers, but majority of the time, as we can see here, it broke below the 48 EMA and continued all the way to this bounce on the 150 EMA. And then market continued sideways markets, choppy markets like this are not the best to trade. So it's best to avoid such scenario where you have this kind of choppy reaction. Here we can see another break of the 48 EMA. Price went down close to the 150 EMA. Price continued all the way. This is 2021 September. We can see broke below the 48 EMA. Tried a recovery above the 13 EMA but got rejected. I think this is like the third time so far we've seen this rejection of the 13 EMA once price breaks below the 48 EMA. So it's something to take note of. We can see rejection continue to the 150 EMA as well. And the 13 EMA crossed below the 48 EMA. But it recovered well at this point. And then it recovered above the 13 EMA. That's why the 13 EMA is so key. If price stays below the 13 EMA, it's quite bad for the ticker you're looking at, which is QQQ in this case. Price continued here. We can see a break below again, but price held above the 100 EMA, bounced off. It got sold back below 48 EMA, bounced off the 100. So these exponential moving averages are quite important, very important. you can see here again, I think this gives a perfect illustration of our back testing, which we've been looking at. This is 2022 um, January. I know 2022 was a bear market year, but at the start of the bear market, this would have given us a signal to stay in cash and try to stay away from the markets, because it's also important to see what happens historically. Backtesting is good, but it doesn't give you full direction of what happens in the future. It all only provides you with data and some research for you to know what to do in future occurrence. So you can see at this point, price bounced off the 150 EMA. If you had bought this deep at this point, thinking, okay, the market is going to rally from here, no. What happens? 13 EMA crosses below the 48 EMA, price bounced off this 13 EMA, which is really key. If you see price not attempting to break above the 13 EMA but being unsuccessful, it's a red light, it's a danger at that point. So you see this price breaks all the way. This is quite a huge downside move from 373 on the Q or 385 all the way to a close at 343. That's almost 50 points. And then we can see here price also tries to break above the 13 EMA, but this is a bull trap, because you might as well think, okay, price is trying to break above, but price breaks below. But that's why it's always best to go into a trade with probabilities. Trading is not where you make 100% wins. There are losses. That's why it's always important to know that trading is risky and risk management is very key. Price broke below that 13 EMA, continued all the way, tried the recovery here. So this was the bear market of 2022. So we're not really focused on that. We're just looking at where you have an uptrend and then price breaks below the 13 EMA and the 48 EMA. So we'll try to skip past 2022. We'll go to 2023. Let's look at this uptrend here. This was a nice bull trend, uptrend all the way. Price broke below the 48 EMA, bounced off the 100, continued sideways. This is not a good sign when you have this choppy market, sideways market. There's no trend, there's no upward trend, so you don't make gains. Bulls are wrecked, bears are also wrecked in this choppy market situation. Price continues all the way. You can see a steady uptrend. Price held above 48 EMA here, 1, 2, 3 locations. But here price broke below the 48 EMA, and we can see that continuation downwards to 150 EMA. Price then recovers, attempts the 13 EMA, unsuccessful for some points before it breaks above again. You can see the bounce here of the 48 EMA. Here we see this again, same scenario. Price bounced off at this point but couldn't reclaim. Sometimes when you see this price unable to reclaim the 13 EMA after an uptrend, it signals a downside. It's not 100% sure. Like I always say, nothing is 100% sure in trading. You have to treat it as probabilities. Price broke below the 13 EMA, continued that downtrend, tried a recovery above the 13 EMA, got absolutely rejected below 200 EMA. And as we can see here, it also tried a recovery, sideways markets. It's in times like this where it's best to stay in cash, because you have this sideways market, QQQ all the way here, a bit sideways, a bit of recovery, rejection. And then we can see here as well, price bounced off 48 EMA, tried a recovery past the 13 EMA, got rejected, price close, bounced off 100 EMA, price close. So you see an instance here where price broke below 48 EMA but quickly recovered. But this is a choppy market. You can see all the way from 2024 December all the way to 2025 2025 February, end of February. So almost 2 months sideways. This is not a good market to trade. It's the best time to sit in cash because you get a lot of fake outs. You can see price bounced off this 100 EMA, tried a recovery, bounced below. So it's just something to be aware of. Now we can see this again. Price broke below the 48 EMA, continued downtrend, tried to recover, got a resistance at the 150 EMA, continued that rejection downwards. Now this was 2025. It's quite a recent memory. This was the tariff crash and the April 7th. I think it was April 7th if I remember correctly. Yes. Yeah, April 7th, where we had the QQQ going all the way down to 400. And at this point, price tried that recovery above the 13 EMA, got smacked down. So that's a point to be mindful of, that there's no 100% guarantee on any trade. You have to treat it as probabilities. What if it fails? The essence of looking at all the strategies and looking at this back testing is not to have 100% win rate. There's no strategy that gives you 100% win rate, but you have to make sure your winners are larger than your losers, and your losers, you also cut them early. Once you see that this price does not hold above the 13 EMA, it breaks down, you have to exit that position. Then we have this uptrend that started in 2025, quite recent. Price stayed above the 13 EMA. It was a clean uptrend. 13 EMA above 48, above 200 EMA. And one thing about good uptrends and good bull markets is that there's a separation. There's a separation between the 13 EMA and the 48. You can see the gap. 13 EMA is 535, while 48 EMA is 514. So that's quite a distance. And price stays oversold on the daily. It would be best at this point, if you're looking for entries, to look at the 4-hour charts when it gets to oversold and tries a recovery. But that's on the 4-hour chart. On the daily chart, it's quite difficult in a bull trend because you don't want to get into FOMO and start chasing the price. But once you go on a lower time frame, it helps you on the entry. Price bounced above, quite a small gap between price here and the 48 EMA. Bounced 1, 2, 3. Those are 3 bounces, 4 bounces, 5 bounces, and then finally you have the break of above the 48 EMA. Then price bounces off the 100 EMA and then continues. If I were to get an entry here, my entry would have been at this point, QQQ 606, which is above the 13 EMA, and you have the separation on the stochastic. K is currently 45. K was 45 while D was 28. So yeah, that's quite a good entry, and that would have resulted in a move from 606 to when it's overbought at 620. Price broke below 48 EMA, bounced off. Then here you can see the gap getting lesser and lesser between the 13 and the 48 EMA. That's quite a signal a lot of people ignore, because once the EMA starts getting entangled and you don't have that separation between the EMAs, that shows that price is getting into that choppy region that is actually worse than a downtrend, because it gives you the hope that it wants to start an uptrend. But you can see from all the way till around February 2026, from October to February. That's around close to 6 months, 4 to 5 months of sideways chop, which is not good for swing trading as well. Then we can see at this point, price finally breaks below the 48. At this point, all the EMAs are getting entangled. This was the Iran war situation, and then price broke below and then started this recovery. We had this downtrend. Price bounced above 48 once, twice, three times, although this is quite it didn't close below the 48 EMA, it just opened below but closed above the 48 EMA. So that's around 4 times price tried bouncing above support at the 48 EMA. Once you see these bounces happening too often, that means price wants to break that point most of the time. Nothing 100% guaranteed. Then you can see this break finally, the close above. It bounced off the 48 EMA, tries a recovery. Now 13 EMA was acting as the resistance. Now today we see price at the 100 EMA zone. So as I always said on this channel, Methodical A1, our job is not to predict the markets. Our job is to see what the market gives us. So let's see what happens this week if price breaks below the 100 EMA, or if price tries a rebound and 13 EMA acts as the resistance. You can see at this point 13 EMA is 704 while 48 EMA is 705. So the 13 EMA is just slightly below the 48 EMA. If we have more downside this coming week, we might see this gap getting more, like the 13 EMA getting further down below the 48 EMA. But if we get a recovery on this market and try to recover the 13 EMA, it might signal a bounce. Thanks for watching this video, guys. Please like, please subscribe, please share this video. Remember, this is just for educational purposes. I'll see you in the next video. Goodbye for now.